Hey folks, Dan Frio here with your market update for December 6th, 2024. So mortgage rates yesterday, they were flat as a pancake. Look over there, most of the things were zero. That's going to change today because the markets were waiting for the new unemployment figures to come out, and they just came out this morning. So we're going to talk about that is where the unemployment rate came in, how the market reacted to that, how equities are reacting to that, and the CME Fed Watch tool what the Federal Reserve is going to do at the next meeting. It jumped all the way up to almost a 90% chance that the Federal Reserve is going to do what? That's what we're going to talk about in today's video. So let's talk about it. Let's get over to here. Here's what the headlines are reading right now. Payroll increases 227,000 in November, more than expected. The unemployment rate bumps up to 4.2. You might scratch your head saying, okay, that was a lot of people added to the payroll. So why did unemployment rate tick up? Great question. So let's get over to CNBC, Rick Santelli to give us all the news. And when he comes back, or when we come back, I'm going to go over and show you the reactions in the market with all this stuff. And then we're going to show what the CME's Fed Watch's tool is telling us, what the Federal Reserve is going to do at the next meeting. Then I have a special for you guys on credit and understanding your credit a little bit more than I think you do now. So without further ado, Rick, take it away, buddy. Give us the news.
Rick, the numbers, please, for November jobs reports.
The November jobs report hitting the wires and pretty darn close to expectations, 227,000, and the revisions haven't come through yet. Oh, they are starting to come through now. If we look at 2 months worth of revisions, we're going to subtract, actually, I take that back. We are going to add 56,000 for a 2-month add. Now let's look at the unemployment rate. It ticks up from 4.1 to 4.2%. Now this is interesting because this equals where we were in June. Let's see where we were, 4.2. In August, we were at 4.2. We're at 4.3 in July. So even though it ticked up, we have been higher. And that 4.3 read that we had in July was the highest going all the way back to October of 21. So very important area we're starting to come up against with respect to the unemployment rate. Now, if we look at average hourly earnings month over month, realizing they were pretty strong last month, they remain strong, up 0.4 again. So that's back-to-back up 0.4. That is a solid read. And do remember, the highest read we had all year was in January, up 0.5%. Now, if we look at average hourly earnings on a year-over-year perspective, also remains very solid, up 4% again, back-to-back 4%. Now, if we look at how that pans through, the highest levels were in the beginning of the year also at 4.4, and then we had 4.3, then we had 4.1 in the first 3 months of the year. But this is a resurgence coming back to some of those levels. If we look at the average hourly work week for employees, that's 34.3, that would be about the eighth 34.3. Oh, I'm sorry. Last month revised to 34.2. So now we've had 7 of those this year. It's pretty much where it's been hanging out. If we look at labor force participation rate, it moves down a 10th. Not good. Actually, down a 10th in the rearview mirror, gang. But if we were expecting a number 62.7, last month it was 62.6. Here we are at 62.5, which equals where we were in May of this year. To find a lower number, you have to go back quite a ways. You have to go back to January of last year to find a 62.4. And finally, the underemployment rate, the actual 4.2%, that's called U3. The underemployment rate is monitored U6, and it comes in at 7.8%. 7.8% versus last month, 7.7. 7.8 is the highest since August when it was 7.9, and 7.9 is the highest that we had for all of 2024. Interest rates like this number. They like this number. If you looked at last month as sort of an anomaly with all the issues that could have affected it, whether it was weather, hurricanes, or strikes, this is somewhat of a nice bounce back. Had a positive revision, but it kind of puts us in a pretty sweet spot. That's what I think the markets are telling us. Pre-opening equities, of course, are making new futures highs on the session. So it seems as though the markets are taking this pretty well. If you look at a 409 and 2-year, remember, 2-year closed at 416 yesterday and last week. Okay, so we're now down on the week, basically 7 basis points. If you look at a 10-year closed last week at 417. It's hovering right under 416 at the moment. Back to the panel.
Fantastic news. So I wasn't expecting such a robust number. So let's go back and go over to this section right through here and see where those numbers are. We had the average hour earnings was at 0.4 previously. They expected it to go to 0.3. It actually is 0.4. So that's good news there. Non-farm payrolls, 36,000. That's the revision. It was 12,000. They revised it to 36,000. They thought it was coming in at 202. It came in at 227. And the head scratcher is the 4.1 unemployment rate. With all these people being added, it now is 4.2%. So unemployment ticked up a little bit, but the markets don't seem to care about that. So let's get over to the equities right now. Here's what we're seeing in the equities markets. Right through here, it is green across the board. Oil is down. So look at these. The equity markets right through here, the top three, those are green. Oil's down and the bonds are down. So this is basically another Cinderella story there. Let's look at Bitcoin. It was about 102 or 3 yesterday. It retreated back, but we're still right at teetering about 100,000 right through there as well. So let's get over to the CME Fed Watch tool. It's telling us now there is an 88, basically a 90% chance the Federal Reserve's cutting rates. You guys realize the Federal Reserve is going to meet in 12 days. So in 12 days, the Federal Reserve is going to come out and tell us exactly what they're going to do. So right now, let's get over to it. Like I said, the equities are doing fantastic. So the overall market right now is doing pretty darn good. So rates are down, equities are up. So good start to the day. So if you want to learn more about credit, I actually created a website, Credit Scores and More, several years ago. My first video that I did, it got like 250,000 views like instantaneously. And I'm like, hey, there's something to this. People need to know more about credit. So if you want to learn a little bit more about credit, go to creditscoresandmore.com. It's plural right through here, creditscoresandmore.com. I think you're going to learn a lot. If you want to use any of the functions here, the free credit systems are fantastic. If you want to go to your true credit score, it's going to send you out to My FICO. So you need to understand your FICO scores when you're doing this. But if you want to just use basically the credit monitoring system that I use, you can check out this system right through here, and you can actually check it out in a lot of details on it right there. So you need to understand your credit. Not only if you're trying to buy your first house or investment property, you need this for cars, homeowners insurances, even your job, or credit cards. If it's that season right now, you're going to apply for probably a lot of credit cards, and the better your credit scores are, the better your chances are getting approved with that as well. So my name is Dan Frio. I do this report every day, the opening bell and the closing bell, to let you guys know where the markets are heading. Today, I'm actually a loan officer. I would love to work with you and help you maybe buy that first house, maybe buy that first investment property. But we also have a lot of programs that people don't know about. So if you're an investor, reach out to us. We have bank statement programs. We have DSCRs, meaning if the property cash flows and you have a good credit score, that's all that really matters. So we have programs like that, I think, that'll help you out quite a bit. So how do you reach out to us? Well, go to therateupdate.com. You can hit the apply now button. If you're looking to buy that first house, please check the grant finders right through here. But the one thing we're stressing right now is where a lot of people kind of get confused is they're like, I don't really know what I'm doing. I don't know what I don't know. So why don't you schedule a one-on-one consultation with me, Alan, or David? There's only 3 of us on our team that take calls, and we all have over 20 years experience. We'd love to help you navigate buying or refinancing in 2025. So thanks for watching. If you want to call us, you can scroll right down to the bottom of the website and it'll give you our 800 number right through there. So thanks for watching. God bless, folks. Have a fantastic afternoon. I'll be back here at the closing bell to let you guys know how all this mess ended for the day. Thanks for watching. Bye-bye.